Howdy howdy, welcome back to another video. This one's going to be about 18 minutes long, and I'm really going to get into kind of like a simplified dummy idiot version of how I build narrative and how I try to stay on the right side of the market. Obviously I take losses all the time. I do it in my live streams and it's okay. It's just a part of getting better. But I hope this will provide some value for those of you who are new subscribers to the channel and maybe more new to trading. So hopefully you guys can glean some insights and apply it to your trading, and I'll see you in the next one. See ya. Howdy howdy. This is shortly after my June 25th recap, and I just want to put together a quick video that might help some of you who are just starting in your journey or feel like you're missing something. You know, maybe this will help, maybe not. This isn't meant to be financial advice, and I'm not profitable yet, but you know, I've been trying this thing for a while and I do know some things, and it's just a matter of applying it and following your rules. But if you've watched DTFX, you know he talks about market structure a lot, and really what I just want to kind of simplify, and it's kind of how I run through it in my brain, is putting together kind of the narrative based off your zones. And the first thing that we need to pay attention to is that nothing is 100% in trading. You could have your perfect ass zone and it might not hold, or it might not deliver the 1-to-1, it might not deliver the 1-to-2. Like, it's just probabilities, and there's higher probability zones and lesser probability zones. But you guys watched, you know, DTFX, and you already know what he talks about, right? It's just market structure. But if you're finding difficulty on, you know, when you're trading live, is like all I'm thinking about, like, you need a couple things to have a high probability trade, in my opinion. And if you have an inkling of where price is going and you know the direction that it's going to be going for this limited amount of time, then you could drop down time frames and find a trade, whatever entry model you want. You find a trade in that direction, and it's fucking bam, simplified for you, right? So we make this zone, you know, maybe higher time frame zone, 12 minute, 15 minute. We broke out of the zone. Now what am I thinking? Okay, so obviously we could keep going forever. We've seen it happen on days, but eventually we're gonna have to reverse and hopefully tap back into this range. And then you also have, you know, if you want to apply the SBS, right? First tap, break, second tap, you know, you could put some of this action in there as well. But at the most simplest terms, you break the range, creating the zone, and then you want to wait for price to trend back into the zone. And then when we enter the zone, it's like, okay, now we could wait for a reversal pattern, whatever you want to call it. Obviously the flip looks like this. Bam. And it's just about probabilities. We broke a higher time frame range. Then on the 1 minute, if we see a reversal down here, now we could ride order flow back into the range. But not every, you know, lower time frame zone is going to tap the 50. Not all of them are going to, the SBS is not going to play out perfectly on all of them, but it's your job just to find the best damn setup that you could find with the most probability, the most confluences you could find. So really the point of this short video is, okay, did we leave the range? Yes. You could find a trade going down, but since we already left the range, the further you go, you could say, or one could say, that the probability is getting less and less that we're going to continue. And then, or, you know, you could just keep taking the zones all the way down until you get the shift in market structure. But, you know, I'm not there yet. I don't see it as high probability. What I would like to wait for is, okay, we're trending down, then we get the flip, and then now, and in back testing, you know, the counter trend trades are less probability. So obviously, if you go on Twitter, everybody's making money on every turn of the market, especially if they're trading DTFX. That's cool. But if you're trying to find the most high probability setups, it would be, in my opinion, waiting until price gets back to the higher time frame zone, and then you find your lower time frame flip. And then if you want, you could even go to a lower time frame, and then you catch a trade just using order flow. Because when we return to the zone, if this trend is going to continue, we will break the low that we just reversed from back into the zone, right? And maybe go even further. So that's kind of what I've been paying attention to in building the narrative for myself. Now, obviously, it's easy to get lost in the sauce. There's this higher time frame zone. There's another higher time frame zone right above it. There's multiple zones in here that you could really get lost in the sauce, but that's just about experience and practice, and really you just got to go look at the charts. And here on the bullish side, it's like, okay, we broke out from this range. Are we tapping anything of significance to the left? And this also gets me tripped up, because these higher time frame zones could just give a reaction and then we continue straight down. But that's when, you know, lower time frame price action could give you a hint. You know, if we wick below the low and then trade back up, there's ways to get involved, but I'm looking for the more high probability ones. And to me, you know, it's when the narrative lines up and I could wait for that, you know, kind of double confirmation. And obviously I'm trying to get involved everywhere, but you know, okay, we tapped into this hourly zone here, and this 12-minute zone facilitated that. So now, if we get a market structure shift down here, now I'm relatively positive that we'll at least build some order flow back into this zone, right? Hopefully we could find an SBS setup in here, or whatever your setup is, and then we potentially will get a reaction. This will offer a 1-to-1, and then we potentially could continue up, break this high, and then that's the higher time frame shift in market structure. And then you just keep doing it over and over. Okay, we broke out this higher time frame zone. I can anticipate eventually we'll flip and come back down into the zone, and then you just keep doing it over and over. And then when we come back into this zone here, look for the flip and just try to get in line with order flow. And obviously it's way harder than that, or everyone else would be hella rich. But you know, if you want to boil it down to where's the most high probability places, it's like you want to sell high, right? So the sell here is probably not as good as the sell up here. You might scalp here though. You know, you could get involved anywhere. But which one's higher probability for you? And it's all about testing as well. Is there anything else I could talk about? Also, one thing that I've noticed is oftentimes if we're coming up into a zone, we'll get a market structure shift, and then you might think that you want to go short, but on the higher time frame, actually, let me, maybe this will go right here. You might want to short this, but on the higher time frame, this market structure shift was actually just the 4 or 5 of the SBS playing out. So this zone won't hold because, say, I don't know, it's kind of hard to fucking see. Let's say, fuck, how am I gonna draw this shit? We have bam, bam, we break the zone, we tap back in, then we come sweep this. So you think that this is or we think, because I still get got all the time, we think it's a market structure shift and that will come back up and trade down, but really this is just a higher time frame SBS, and the higher time frame zone is going to run this lower time frame zone. So a lot to think about when you're trading, and even harder to do it when it's live. And I guess I'll go look at, today's price action and how it kind of helped me. I still get lost in the sauce for sure, but helping you build narrative. Like, this is the 15, let's go to the 12, same shit pretty much, but we're ranging here. We break out of this range with the candle closure. Now we can anticipate, it doesn't have to, but I'm anticipating a trade back into the range. And this is late in the day, but let's find a better example. We break this range right here, we tap back in, we close below, and then we sweep that high too. Oh, this is a good example right here. Actually, I got on this one yesterday. So a 12-minute SBS is playing out. We have one first tap, new low, 4, 5, and then we can anticipate this low being ran. But on the lower time frame, let's make sure I could oh, that's not gonna work. 20 pips, there we go. On the lower time frame, you see this as a market structure shift, right? Low, high, break the low, break the high that put in the low. It's a market structure shift. I actually took this trade. It was a smaller zone up here, but why did this zone not hold and why can we anticipate the lows is because the higher time frame is delivering an SBS. And this, if you think that, this is the first tap, new high, and then we're gonna sweep it down here somewhere, the higher time frame takes precedent over it. And that's something I'm working on, but might be helpful to you. It's something I'm asking myself every time before I take a trade. Is this market structure shift? And hopefully I see the market structure shift so I could take this trade, or I see the SBS rather, so I could take the proper trade instead of the wrong zone. But I'm asking myself before I take a zone, was that market structure shift that you're relying on just a higher time frame SBS sweep? So that's important. But anyways, about the narrative building, you break the range, anticipate going back, and then you could have anticipated the low being broken. It doesn't have to, but there's a probability that it will. And then so I guess in the same example, we swept that high. If you believe this is a higher time frame SBS, now you're just looking for a way to get involved on the way down to this low. So I can't go to the 15-second on this, but you know, you have this high, or this low, this high. You break this structure here. So now your lower time frame is aligned with your higher time frame bias. This one doesn't really offer a trade for my system. It might for you. You could take this sweep right here, but you know, just looking for a way to get involved. I'm sure on the lower time frame there is. I couldn't get involved, but then after we break this low, okay, well, I can anticipate order flow changing, or you know, are we tapping into something farther to the left, which I think we did. So we might consolidate, or we might reverse. There's a candle structure shift in here that, you know, I don't really use as often anymore. But after we break this low, where are we coming back to? The range. So you could try to get involved in a lower time frame long in here, and then once we flip again, you know, and then we might start consolidating. So, you know, the market's not going to be easy, but there was a trade in here, I believe, that I didn't take. Valid low, broke into the downside. So we traded back into the range. We got a flip. So now we're aligned with our higher time frame trend. You could see, you know, you can see this as the breakout, tap back in, new low, sweep, target the 1-to-1, or if, you know, you're a hero, you could target the lows 1-to-2, whatever. So anyways, I hope that's helpful for someone that's just starting out, or maybe kind of lost in the sauce sometimes. I found it kind of helpful just to simplify my trading. We left the range. I'm waiting for it to go back into the range and then get back in line with order flow. Sometimes I don't get let in, you know. Sometimes I miss the only setup that I get. It's just a matter of experience. But if you're looking to be, you know, a high probability trader, I think narrative is very important, because you can't just take these patterns wherever they appear, and they're higher probability when you're in line with the trend. But let's see, we left the zone here. Could still get involved down here if you like. You know, that's something you could back test. Once you get a flip, you could potentially get involved in order flow going back up. And then once you dig into the zone, you could wait for the flip and then try to get involved again. Honestly, I don't see much that would get me involved, but maybe your entry model presents entries where mine doesn't. So hope this video was helpful. Leave comments below. I can make more videos like this if y'all want, if it's helpful for, you know, some of the beginners. And if something's incorrect, or if there's a gem you guys have that you can share with me to make this even more clear, feel free to share it down in the comments. I do have an Apex Trader funding code, but I'm not sure if I want to share it anymore because some of the ghost orders and stuff that I've been having. So appreciate you guys for watching. If it was helpful, hit the like button. If not, appreciate you anyways. Y'all have a wonderful day. Catch you in the next one.